Dumelang, I will be doing the cash budgets from the November 2018 IEB paper 2. Now, in this question, we've got IEB Manufacturers Limited is a small company that produces computer components and employs 200 direct workers on their production. I will simply highlight that because it's very important. I don't know what to expect, but I'll just highlight that. And obviously in their production line. Okay. On 1 February 2019, they will introduce robotic arms. Robotic arms are simply machines that will simply help them in the production process. As a result, 90 workers will be retrenched, meaning that 90 workers will lose their jobs. The last day will be the 31st of January. In this case, it means that for the month of January, these 90 workers will still be paid the normal wage. The severance pay is a payout that an employee gets when their job or employment has been terminated. It's calculated as 4 months of their normal wage. Okay, that is important, normal wage, and it will be paid on the 1st of February. And obviously they said 10 of the remaining workers will be trained and promoted to supervise the production line. Please note that these workers will no longer be recognized as direct labor. Instead, they will be recognized as indirect labor. That is because they move from being directly involved in manufacturing computer components to just supervising, and supervisor salary is included under factory overheads. Excuse me. On the 1st of August 2019, AMSI will introduce more robotic arms. However, please note that August is not within the required budget period, and you will see this later on. Another 90 workers will be retrenched and another 10 will be trained and promoted to supervise the production line. The robotic arms can produce 3 times. That's why probably they're simply opting for machines to produce these computer components. That is because they are faster. They produce 3 times the number of components that of the workers and produce that each worker or most workers or all the workers can produce in the production line. So this simply tells you that the machines are 3 times faster, resulting in more output. More output will result in increased sales. The company is limited by their sales as they only manufacture what they can sell. So in this case, it means that they will manufacture more faster and sell more quicker. And then we're given AMSI Manufacturers Limited cash budget for 3 months from January to March 2019. We know that we have to calculate. In this case, please note that cash budget is all about cash. It's all about money coming in, money going out. Under receipts, we might be required to calculate A and B. Under payments, which is simply money going out, we might be required to calculate C, D, E, F, G. That means the amount will be the same there, as well as H. Now here we're given cash sales for January. We're also given cash sales for March. We're given cash received from debtors. This comes from your debtors collection schedule. That is for January, but January is not within our budget period because our budget period is from March. It's from February until March. This 1,887 is within the budget period. Let's go to additional information. I will start with glossary, where they said that retrenchment simply means to lose a job because the business no longer needs the worker. Severance pay is money the worker receives when he or she is retrenched. Under additional information for the data collection schedule, they told us that cash sales are a set percentage. They're not telling us how much percentage of sales will be cash and how much percentage of sales will be on credit. Sales, remember, it's when we sell. Cash sales relates to us selling goods for cash. Credit sales refers to us selling goods on credit. Now, according to what we are given here, a percentage of sales is collected in the month following the sale. So I will just write credit sales, okay? So we have month number 1 after the sale. We've got month number 2 after the sale, and we've got number 3 after the sale. This is 2 months after the sale. That is 3 months after the sale. This is 2 months after the sale. This is 3 months after the sale, and that will be 1 month after the sale. Okay, let's check. They say a percentage of credit sales is collected in the month following the sale. So basically, we don't know how much that is. And then they said a percentage of credit sales is collected in the second month after the sale. They also don't tell us how much it is. And then the last one says that 20% of credit sales is collected in the third month following the sale. So here we have 20%. It is the only percentage that they gave us. So clearly we'll have to calculate the percentage collection for the first month after the sale and the second month after the sale. Then they told you that January sales will increase. In this case, will be 10% higher than December sales. That simply means that if I have December sales, when I multiply these sales by 110%, I will get January sales. They will simply give me January sales. How did I get 100%? Remember, the normal sales will be at 100, but in this case, they told you that they increased by 10%. So you just add 10% to that 100 to find the increased amount. In that case, it will be 110%. And then they said that under other additional information, the company keeps a constant amount of trading stock. This simply tells you that your trading stock amount will be the same as your cost of sales amount. That's all it tells you. And then they say to you 60% of direct materials are bought on credit. That means that if 60% is bought on credit, 40% will be bought for cash. Please note that this relates to purchases, okay? This relates to purchases. So it's not about sales, it's about purchases. And they said here, um, um, this is repaid. So basically, when we have credit sales, credit purchases, sorry for that. If we have credit purchases will be repaid in the month following the purchase, but we will get 8% discount. This simply means that we will not pay 100% of what we owe. We will simply pay only 92% of what we owe. All right. How did I get that 92%? For me to get that 92%, I simply took the 100% and I subtracted the 8%, and that's how it gave me 92%. So we will only pay 92% of the 60%. That's what it simply means. We will simply pay 92% of the 60%. Remember that the 40% represents cash purchases. Note that with cash purchases, money goes out immediately. The same with cash sales. Money comes in immediately in the month of the sale. Okay, when it comes to cash purchases, money goes out immediately in the month of the purchase. Please check out the next video as we will start answering questions relating to this information booklet. Don't forget to subscribe.